Quite weak data on the US unemployment claims led to an insignificant drop in the greenback. Notably, the previous figures were downwardly revised. However, the published report is just a reason for a local bounce after a considerable increase. Since the beginning of the European session, the US dollar resumed gaining in value, regardless of the published reports. Thus, the Eurozone manufacturing PMI declined to 52.1 points from 54.6 points instead of falling to 52.0 points. This fact should have supported the euro, while the situation with the pound sterling is more dramatic. The fact is that in the UK, final data on manufacturing PMI turned out to be well below the forecast, which showed a decline to 53.4 points from 54.6. In fact, the indicator decreased to 52.8 points. Only preliminary estimates on the Eurozone inflation attracted interest of traders. Thus, inflation was expected to accelerate to 8.3% from 8.1%. In other words, inflationary pressure is rising so rapidly that the expected key interest rate hike will hardly improve the situation. These concerns are pushing the euro and the pound sterling lower. However, the real data was even worse than the forecast, as inflation accelerated to 8.6%. The data shocked traders who now do not know what to expect from the European Central Bank. Such uncertainty frightens investors more than other factors. It means that the euro and the pound sterling will go on losing value. The United States is also going to disclose its business activity data today. According to the forecast, the indicator may decline to 52.4 points from 57 points. Judging by traders' reaction to the same data from Europe, market sentiment will hardly change. What do we see on the trading charts? The euro-dollar pair approached the low of the downtrend. As a result, the volume of short positions dropped, thus causing a technical rebound, and the earlier broken level of 1.05 is acting as a resistance. The current rebound may point to a gradual recovery in the number of short positions. Against the backdrop, the pair may slide to 1.0350. The alternative scenario will become possible if the price settles above 1.05 on the 4-hour chart. And in this case, the quote may resume hovering within the range of 1.05 and 1.06. Meanwhile, the pound-dollar pair resumed falling after a short-lived rebound. The lower level of the earlier broken range of 1.2155 and 1.2320 is acting as a resistance, and this fact allowed traders to increase the volume of short positions. If the price settles below 1.21 on the 4-hour chart, it may slide even deeper to the psychological level of 1.20. How we're going to be in the short term, we will definitely tell you in our next news release. Don't miss them and stay up to date with us. See you soon.